moving into today's trading idea, we have highlighted what we call that sector index in this for today. Sector index that are in the spotlight are Bursa Malaysia Healthcare Index. So interestingly, why we think we want to highlight the index, because if you look on the string right now, the trend, I think since November last year, has turned more supportive. The trend structure has been, quite decent, and the sector in general has performing quite well. We've seen a significant rally, I think since November last year. But however, I think back in December, the index is pretty much stuck within the consolidation, ranging between 1,900 to 2,000 region. Regardless, I do think that sector index could remain on the positive side. Now, what makes interesting, the recent decline was pretty much kept within at the red line over here, represented by 88-day moving average, keeping the long-term trend remain on the upward. So you are seeing a subsequent rebound within this, the red line, and the index in general also rebounding off above the major resistance, which is now turning into a support level. All right, because of this subsequent rebound for the past few weeks, so I do believe that what we call that the current upcycle could actually continue. If you look the reading on DPO or the D trend, you're seeing the upcycle also has begun. Now, another interesting angle to look at is actually how you seeing the momentum. The pullback on RSI was pretty much kept within at 40 point, and which is also at within 61.8% of Fibonacci level. So we've seen a new uptick as per yesterday, and yesterday also you are seeing reversal signal in terms of the morning star. So we think there's decent chance for the ongoing uptrend to continue, charging toward the net resistance level toward at 2015, the net resistance to 2060 and 2130 point. So because of the what we call that bullish bias on the healthcare index, we decide to re-highlight two of our stock that we highlighted earlier. Now, moving into today's trading idea, the first stock that we highlight will be Hartalega. Hartalega has been highlighted in our trading seminar on the 13th March, and the stock is gaining about 11.7%, which is also closing slightly above in our first target earlier at RM2.77. And now, the good thing is, despite the so-called setback, the setback was pretty much kept within this 38.2 Fibonacci level and the 88-day moving average. As per yesterday, we've seen quite stronger buying interest, although the buying interest has been ease off toward the later stage of the session, maybe on the during the evening session. But I do think in terms of overall trend structure, still pretty much remain attractive. One, the stock is continue to form a new high-low structure within 88-day moving average. Two, if you look at the reading on the D trend and RSI, also looking quite positive, and we think there's decent chance for the ongoing uptrend to continue again. Because of that, we decide to re-highlighting the what we call that the stock with the new and higher target price at RM2.91 and RM3.25. In terms of risk to reward ratio, it does look quite attractive with 7% downside risk versus 21% upside potential. So risk to reward ratio almost 1 to 3. Now, in terms of the quant scoring, we remains on the quant side of momentum. Quant score also high at 7.3. So reiterate our technical buy with the new and high target price. Same thing can be said about Kosan. Kosan has been highlighted on the same day, 13 March, on our report. But Kosan has made a significant, I would say, a more stronger rally versus Hartalega after gaining about 19%, closing above our second target actually earlier. And the subsequent pullback was pretty much, I would say, limited. So because of that, the new high-low structure remains quite positive. Momentum appear to be much more stronger for Kosan. So we think there's decent chance for the ongoing uptrend to continue. Risk to ratio also quite similar with Hartalega with 7% downside risk and 21% potential upside risk to ratio about 1 to 3. With the new resistance is actually pegged at RM2.30 and RM2.55 cut loss will be below RM1.95. In terms of quant style, same momentum with the scoring also higher compared Harta Lega at 7.5.